Good afternoon and welcome everyone to the Trading Talk, the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. And in the presentation, we can see that the first part will be the previous questions that we received, which is this slide over here. We're going to go through the questions and we will do our best to answer them. The second part is the dynamic questions, which are questions that you guys can ask and I can write down here. We will go through them and answer them as well. The third part is more informative, just to share with you some links to save you the trouble to find those things by yourself on the website. And lastly, the slide is to help us emphasize the analysis approach, technical and fundamental analysis. As you can see, this is really just to help us understand analysis, but I'd rather use live data on the charts. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be constructed or applied as an investment advice, recommendation, or a suggestion. Now, before we begin, I understand that sometimes we need to recap, we want to watch the webinar again, and we would like to have access to the recording of this webinar. So, of course, this webinar is recorded as we speak, and it will be uploaded to YouTube to our channel. That means that if you watch this webinar again, you can just go to our YouTube channel, and there you can find the recording of this webinar. And not only that, you can find all kinds of different things in our YouTube channel regarding analysis, regarding risk money management, regarding other topics in trading as well, which you can find there. And it's just a lot of content for you guys to use. Okay, let's read the first question. How much money I need? I need to open one lot with NASDAQ. Okay, let's take the question, paste it down here, and go to the chart. So at the moment, we're looking at Australian Canadian, and this is the web trader. For whoever is not familiar with this platform, it's embedded in our website. It's very easy to get to here just by logging in with your email and password into AvaTrade, into our website. Now, usually it may look like this. It doesn't really. As you can see, we can expand or minimize the chart just by clicking here on the two arrows, and then you can see that the chart was expanded and the lists is no longer on the screen. Okay, there is another way to search an instrument that you want. One way is to pick it from the list. Another way is to just erase what is here at the top left corner and to write the name of your instrument. So if I'll go for NASDAQ, as you can see, NASDAQ, right? Yeah, and that brings us US Tech 100. And then what I pick it from the list, it becomes the chart. And then I can click sell or buy to enable the order entry. And in here, you can see that there is something called lot, which is our measuring unit. And the lot size can be found in here on the instrument details. As you can see, there are two tabs. One tab is the order entry, which opens automatically as soon as I click buy or sell. So even if I'll click a sell, it does the same thing, and I can change it here if I want to. And then if I'll go to instrument details, okay, then I have the lot size here. Okay, the lot size is here. The question was, how much money do I need? How much money? Sorry. Okay, to open one lot with NASDAQ. And now one lot, let's see, one lot is 100. Okay, so this is one way to know what's the lot size for NASDAQ. Another way is to just, we can stay here and to just write where it says lot, not the amount index, but in here lot, to just type 1, and we can see that 1 is indeed 100 indices. Okay, so how much money do we need? Let's see. So we can see that the price per index at the moment is 21,816 for a buy. Okay, and since one lot is 100 units. We need to multiply that by 100. Okay, and that gives us the value. Okay, and at the moment, so let's also elaborate about this equation. So we have the price per unit. It doesn't matter if it's an index or a stock or whatever you're measuring. Price per unit times number of units equals the value. So same apply to here. 21,815 times 100 gives us 2,181,750. Yeah, well, the price changed a bit. We understand that the market is moving, and that's fine. We're still going to work with the numbers we have in here. And now we have a leverage here of 1 to 20. So let's write it down. Leverage 1 to 20. Okay, and what that does is it multiplies buying and selling. Okay, great. Now, because I multiplied by 20, my count is multiplied by 20 as if I had 20 times more for NASDAQ. That's important to understand that the leverage is individual. It's individual, and for commodities, I might have a different leverage. For currencies, I might have a different leverage. For even different indices, I might have different leverage. Okay, so I need to pay attention to that and to see what my multiplier is. But if the case is that it's 1 to 20, I need 5%. I need 5% of my value. Okay, just a second. What I wrote in here is you don't need to know that. Okay, you don't need to know this equation because you can find it in here. If I'll go to instrument details and I just scroll down, we can see the margin here is 5. 5 what? 5%. 5% what? 5% out of the total value of this position. Meaning that, as you can see at the moment, we have 1 unit. Okay, so 1 unit, the value stays the same because we're multiplying it by 1. And because we're multiplied by 20 with the leverage, we need 20 times less. 20 times less from what? 20 times less from the value. Okay, so the exact same way I can go with 1 lot. And to show you that with 1 lot, if I'll divide this 2,180,000 by 20, we do get this number. Okay, so let's do it together one time. 2,180,550, that was the initial figure, divided by 20, and that is the number that we have here. This is so very simple, and the equations here should work universally with other instruments as well. So we're just going to write it down. Value divided by leverage is giving us the margin impact. And let's maybe just do it like this. Okay, and that gives us 109,000, 27 and a half. Okay, great. Well, obviously we are with 10,000. So for the sake of the example, this particular account doesn't have the ability to have 1 lot. And to be frank, not even 0.1 lot. As you can see, we are with 10,000 required. Margin in here is nearly 11,000, so we're not there. If I'll decrease it by 10%, so okay, oh sorry. So now we can have it, but this is not something that I would necessarily recommend to use all the margin. Of course, everybody has their own risk assessment, but this is not something maybe that I would want to do in my own strategy. Okay, but okay, so let's carry on. At the moment we've understood the exercise here, it's very simple. This calculation here is very simple. All I had to do is just to place one lot, and the margin impact is right here. Of course, this equations is very useful for whoever using MT4 or MT5 to understand a bit more to depths how the calculation was done in here. Okay, which as I showed, the value is the number of units times the price. Okay, and the margin impact is the interpretation of if we divide the value by the leverage. Okay, or the other way around, I could just, again, I'm only showing it to you. You don't really need to remember that, but this is a webinar and I'm trying to, okay, if I'll take 5% out of that, so that is this, or I can just divide it by 20. All right, let's carry on. I don't want to delay about this question too much. Let's take what we have here, and hopefully that will fit nicely into our presentation. Okay. Oh. Of course, as I said, if anybody has any questions, you're all welcome to ask. And of course, you can watch the webinar again in our channel. Okay, we have a question here from Samuel on Ava options. Which indices or commodities can we trade? Okay. Well, it's a bit difficult for me to show it to you now because I don't have the options platform in here. I have the regular platform in here, but I suggest you will visit our YouTube channel and you can watch the webinar specifically for options to show you how to choose the lot size and what the valuable instruments there are. I can't show it to you now, and it's really pointless to go through that, unfortunately. Okay, but this is really easy to do, and it's something that is generally in our default interface. Okay, it's very similar to what we see here. It's just options, so it's a bit different. And I strongly suggest you'll download the app. It's free. It's free to download the app. You can download the app and see the videos in our channel. And I'm sure that you will find the answer to those questions there. As I said, what you're asking for is default in our interface. Okay. And our second question here is what is one-to-one ratio in trading and how does it affect my strategy? Okay, well, let's take that question and paste it like this. And in here, let's make a quick comparison with maybe we'll have NASDAQ, and maybe let's see just a second. Okay, so let's assume that we are expecting NASDAQ to head towards the, just a second. Okay, let's suppose that we're expecting a reversal here, and we're expecting, let's change it quickly to a sell. Let's suppose that we're expecting to NASDAQ to flinch down another 1,000 and possibly to trigger another 1,000 up. And now we're looking at the ratio of 1-to-1. Just a second. I'd rather have this placed on the chart. So we have the Since we are with a sell, our take profit needs to be down. Okay, let's make it green. And in here, let's make it red. Okay. We're also going to have a nice center line here, one for the resistance, one for the support. Okay, there are other areas here. But let's assume, okay, that we are at the moment, we're looking at the $1,000 change. Of course, we're not expecting it to happen in a day. Okay, if I'll change to weekly charts, it looks a bit nicer. Yeah, we can see that potentially if it keeps going, it's not going to be linear, of course. We can see that Nasdaq was ranging around those levels, and the only time that it passed and created a new resistance in here was around was around 2 months ago. Okay, we can see 2 months ago, but beside that particular time frame, let's go back to days. I think it's easier to see it like this. But beside this particular time, okay, it hasn't passed that level, right? This is the only time that it passed the 22.2 mark. Okay, we can see that it tried, but it was rejected, and possibly if it passes that, I can expect it to go even higher. Okay, but this is where I would want to have a stop loss at. Okay, at the moment I don't want to go too much into the analysis, but I just wanted to place a few lines here to just help understand better the scenario that I'm expecting for. So I have here the take profit, okay, and I have here the stop loss. Of course, it doesn't have to be $1,000 difference. If I'm thinking that it's too far away, it could be maybe half of that, and then we can increase it like this. Okay, and then we can just take it $500 away instead of $1,000 away. Maybe it will be a little more realistic in the range, the time frame that we're looking at. So 22, like this. Will it work? Not really. 22,000. Okay, great. And in here, oh, sorry. We are with a sell that needs to be higher. Okay, great. And now, and let's flatten out our entry. That looks great. Okay, so this is what we would call a 1-to-1 ratio. And at the moment, let's make it like this. Take profit. Will it work now? Okay, something here doesn't make sense. This needs to be lower, so 21,300 in here. Great. And the other one for the stop loss, 22,300. That is here. There we go. Okay, great. So at the moment we have $500 difference for each. Something here again doesn't make sense. This needs to be 21,000. Sorry, we are with a sell. There we go. Okay, and this is what we would call 1-to-1 ratio. What does that mean? That means that we're expecting to make or lose 1,000. And if I'll compare it with my balance, we have 10% exposure or 10% expected gain. How does this affect my strategy? Well, if for instance, if I would like to diverse and have additional, let's first take the first scenario. Okay, if I just take this, if this is my only position, what can I expect to happen? Just a second. Okay, we're writing down the numbers so we can evolve with this scenario and learn what can be done to improve the numbers a bit better. Of course, if I like 1-to-1 ratio, there is nothing bad at that and I don't have to change it. But if I do want to change it, just a second. Okay, why did we place the take profit lower? Because we are with a sell. $22,300, yeah. Okay, and now I have adjusted. As you can see, initially we took $1,000 difference from the entry, but this is a bit far away, so I took 500, which is a bit more realistic. And I have extended the lot size from 0.01 to 0.02. That means that we need fewer movements to get to the same amount. Okay, and now with 1-to-1 ratio, what I can expect to happen is I can expect to either gain or lose 10% if one of those will be triggered. Just to for the beginners, take profit is something that I can set in advance to stop my position automatically with the profit, and stop loss is something that I can set to automatically stop the position with a loss. Okay, and as you can see in the platform on the website, the web trader, we can simulate the possible profit and possible loss. And at the moment, it looks the same. Okay, keep in mind that if you're not enabling the execute when price hits, what will happen is the market will keep moving and the numbers you're going to get here are not going to be precise. Okay, because the entry will be based on market execution. So if you're going to choose a number like this, which is flat, and at the moment it should trigger at 21,800, regardless the price that it's at right now. Okay, so those three are pending orders. How does this affects my strategy? Well, let me show you an example. We have here NASDAQ, 10%, right? Okay, let's suppose we have another instrument. Okay, let's split it to half. This instrument is gold. Okay, and with gold, we will just a second, so that we don't need to work too much. Let's just do rough analysis because we just want to understand how it affects. We're not going to do any crazy analysis here. Just a second. Okay, it's a bit difficult, so I would have to just quickly look at the chart here, and then we can split the screen. Well, since this is an all-times high, there is really no point doing too much analysis, as gold is driven mainly by what's happening with the economy. And let's maybe expect gold to go back another just a second. So the highest was 29.45, 28. Okay. Oh, I think that my screen screen disappeared from the software. Just does seem like the average movement, it can climb back to where it was. So I can assume it can move another 28, maybe $25 higher. So $25 higher from the current price is okay, 29.42. Sorry, this goes to the take profit, and in here this will be the existing price, and we can also subtract 25 to make it oops, to make it the stop loss. Okay, and we can also extend the lot size. Okay, and now we are also looking at 1-to-1 ratio. Okay, so we have two positions, each can make or lose 10%. That's great. It's not really great. We're gonna see how we can make it great, but at the moment, it's not really great. Okay, this one is a buy. Entry price. Okay. This one was 2942. And okay, great. And now we're looking at, as I said before, 10% and 10%. Now, what if I want to maintain this 10% for each position, but I'm not so happy with the exposure of 10%? I believe that it might be safer to go with maybe 2.5. Okay, to go with a ratio of 1-to-4, I can gain 10% and I can lose a max of 2.5. So this can result 10%. I've got no problem with that. But this 10% I want to make to 2.5. This one also 2.5. So how can we do that? Well, the easiest thing to do is to get the stop loss a little closer to the entry. So instead of making it 2892, which is here, which is here, just a second. Okay, we can divide this $25 by 4 and make it $6.50 away. Of course, it might be too close, so we can maybe place it $10 away. Again, I'm not getting into analysis if it's too close or not. I'm just showing you the purpose. I'm just showing you how to use this and how to do this exercise. Of course, I can keep it at the same distance and lower the lot size, but then my profit will be affected as well. Okay, but if I want to maintain the same profit, I can just get it closer to the entry. Okay, and this way, instead of losing 5,000, I'm losing much less. Let's flatten that out. Okay, and yeah, without the spread, this should look like 250. So instead of this, we can go for 2910, right? 2110. And with NASDAQ, we can just, sorry. we can choose okay. Let's copy our numbers, 21,300 and in here okay. And now what I actually did is I kept the ambitious 10% that I had here, or maybe not ambitious. That depends how how the strategy is built. But at the moment, what I did is I'll quickly fix that. Okay. What I did is I maintained the profit that I was expected to make, and I turned the 10% exposure to 2.5. And now instead of looking at 1-to-1 ratio, I'm looking at 1-to-4 ratio. And I'm expecting to make 20%, or I'm exposed to 5%. Of course, this technique can be expanded, and I can diversify, and I can split the exposure the way that fits right. And I don't have to aim for 10%. I don't have to take 0.02. I can go for 0.01 as an example. But I'm just showing you here to demonstrate what the ratio is and how you can maneuver with it. Of course, everybody can work with their own numbers and their own targets and exposure. Okay, 1-to-1 ratio means that we are expected to make or lose similar amount. Okay. Yeah, and it affects the strategy in a very simple way. If I wouldn't expand and add gold to the equation, and I'm looking at Nasdaq to either make me or lose 10% with it, that means that I'm not going to make any progress if Nasdaq doesn't go to where I expected it to get to, right? If it keeps going higher and higher and it triggers my stop loss, I have nothing running in the background. Again, if this is my only position, that will to make profits with. Okay, there is nothing else. So if I diversify and I have one position with Nasdaq and another one with gold and another one with something else as an example, then I can customize this 10% to split, and instead of being in one position, it could be in 2 positions or 3 or 5 as an example. And I can divide this 10% to suit to what I'm planning to achieve. Okay, it doesn't have to be in a single position, in a 1-to-1 ratio. Of course, I don't want to split this 10% to too many instruments or too many positions, because then it might be difficult to manage. If I have 20 open positions and in each I'm open for 0.5%, it might be more challenging to manage than a fewer positions. Okay, but that's a matter of flavor and how aggressive you want the diversification to be. So I'm not getting into that now. What is the difference between lot to 100 to lot to 1,000? This is again very easy to see. Let's get rid of everything here. And as you can see, we have a lot of things on the chart. We can clear drawing again. Let's carry on with gold. And at the moment, we'll make it one chart. Okay, again, we'll bring gold up, choose it from the list, click buy or sell, and we have it. And the question here is the difference in lot size. Okay, so let's compare gold with maybe something that has different lot size, like oil. Okay, and we can see the differences. So the difference is very, very simple. If we'll take 0.01 with gold, it equals to 1 unit. So the value in here, as we've understood, is divided by 20 to give us the margin impact. Let's do it quickly together so we'll understand how it works. Okay, I've divided this number by 20 and therefore my margin impact. Okay, that's for 0.01 with gold. Keep in mind that the lot size for gold is 100. Okay, again, I can go into the instrument details, and in the instrument details, we can see that the lot size is indeed 100. Okay, so each dollar with 1 unit that gold will move. Beside, there is one difference. The difference is that with gold, it's okay because the lot size is 100. So 0.01 really gives us 100. Okay, and then each dollar that it's moving, okay, if it moves up $100 as an example, so we can make $100. You can see that, right? I've took 100, added it to the price, and then we can make or lose 100. This is with 0.01. With 0.1, it will be 10. So the result here will be multiplied by 10. If it's one lot, so the result here will be multiplied by 100. Okay, and 100 times 100 is 10,000. Great. What is the difference? In lot size of 1,000, let's say with oil as an example, and one lot equals 1,000. Okay, again, instrument details, the lot size 1,000, great. That means that 0.01 is automatically 10, is not 1, right? So the value displayed in here will be, we can still divide it by leverage, okay? But it will be automatically multiplied by 10, okay? Whatever value I have here, you see I have a value of 70, okay? But because the lot size is 1,000 and 1% of 1,000 is 10, so this value automatically multiplied by 10, which with gold, 0.01 giving us 1. But with oil, 0.01 is giving us 10, yeah? And now each dollar that oil is moving will give us 10, okay, in difference from gold. So if I'll increase it by 1, okay, we can make $10. If I'll decrease it by 1, then we can also lose $10, and that's great. Let me maybe flatten that out. Again, we've learned that if we don't enable the execute when price hits, the numbers will keep moving, right? Okay. So this is one difference. The difference, as we saw, is the margin, right, which is multiplied automatically by 10. The second thing is the profits or loss that we can make. Meaning, at the moment, because we're multiplied by 10, each dollar here will reflect a $10 profit or loss. And if I'll go with 0.1, it will be each dollar will worth 100. Okay, don't be confused by that number. 0.010. It's okay. It's 0.1, but the lot size here is generally 1,000. So one lot is 1,000, right? That means also that we can make or lose 1,000. We are based on the amount of barrels of units. If this would have been something with a higher lot size, let's say like silver is an example, then if we take one lot with silver, we can see that it's 10,000 units. And now every dollar, if we take one lot and gold, silver gets down $1, okay, let's suppose that this is a sell. So we will gain or lose 10,000 as well. Yeah. Very, very simple comparison to make. Very, very simple. And okay, let's expand it. And you can see 10,000 for one lot. Of course, 0.01 will give us 1,000 and 0.01 will give us 100. But you guys understand the sake of this exercise, and this is very, very nice comparison that you can make with each and every instrument that you would like to check its lot size. All right, so the difference is the amount of units we acquire in a sell or a buy. And the amount can make or lose per dollar movement with one lot. As we've made a comparison, one lot with gold means every dollar will equal to 100. One lot with oil means that every dollar will equal to 1,000. And one lot with silver means that every dollar will equal to 10,000, right? Which we can see in here. Yeah. What is the difference between using signals to copy trading? Well, signals are messages, instructions, how to buy and sell, right? We can even look at the signal section in here. Okay, and you can see how signal, how does it look like? So we'll have maybe, you see oil. So let's expand the screen. We can see there is some nice analysis here. We have a sell scenario and a buy scenario. This is on a sell type. So as we've learned, when we are selling, our intention is that the value will decrease. Therefore, our take profit will have to be in a lower value. So if I'll click here, sell with a sell scenario, I have I have a signal here ready to be executed. Of course, I can adjust it if something is not to my liking. And I can also adjust the lot size to match to match to my ambitions. Okay. Besides that, let's change maybe to days. Doesn't really matter. At the moment, okay, so this is a signal, and copy trading is something else. Copy trading is just a second. Okay. And signals, instructions, how to buy and sell. And copy trading is actually copying a whole strategy. Of course, it can work in different formats, but the most casual way for this to work is link account A to account B. What does that mean? It means that account A can be maybe with a strategy, maybe with let's say 5,000 balance as an example, and trading forex and maybe indices or maybe stocks even. Okay, what will happen if I'm copying another trader is my account A, as I said, with everything that is doing will reflect to account B. Okay, now in our app, which is a separated app from our trading app, it's called AvaSocial. You can choose to either follow or copy another trader. Now, follow is in the shape of signals. You get messages, you can trade accordingly and do whatever you want with those messages. You can even do the same, take the same position with a lower lot size, with different lot size. You can even do further analysis and improve the whatever this trader was doing. Okay, so this is follow, and to copy is that actually means that your account will be linked to another trader's account, and it will run automatically without you taking any position. Okay, it will open the position, execute the positions on your behalf, similarly to the trader that you are copying. Now the app itself is free to download, so I recommend you guys to download AvaSocial, regardless if you have a strategy or not. I think it's just it's great even for research purposes, and of course those two functions are great. And I'm gonna say there is another advantage using AvaSocial, and that is that you can change the lot size to match to your account size. So normally, if my account is with, let's suppose with 5, okay, let's suppose I didn't have 10 here, but I had 5 as an example, or even 100, okay, and I want to copy a strategy from someone who is trading with 20,000 or with maybe even 10,000. Okay, so with $100, can my account do the same thing that the 10,000 or 5,000 can? Well, not necessarily. So what I can do is I can customize the lot size to be a lower lot size, but with the same strategy. That's something that I can do. Of course, with such a tiny amount, I'm not even going to expect to make any great result, but if I'm just doing the research and I'm testing things out, it can be helpful. Yeah, that's mainly the difference. Let's maybe take the answer here and try and paste it in our presentation. Okay. And okay, that seems fine. And now let's share with you some links to save you the trouble to find it by yourselves in the website. Okay, so this will be pasted in our chat. You should see it at the bottom left area. So this is for further education, more videos, more educational content in here. You have login and make a deposit if you're still on a demo and you want to really learn and improve. So this is the best way to do it. In here we have the FAQ and the help center for even more information, and this is also for a real account. And in here we have the academy. I'm also going to show you how to access it from the website. As you can see, it's very easy to just a second, I will show it to you. Okay, on the left hand area we have a few buttons here, a few menus. The top one is for personal details. This one is to trade. This is where we are at right now. The positions, orders, history. In here we have the signals, which I've showed you. In here we have the news, discoveries for even more types of analysis, additional platforms. And here at the bottom, you see at the end of this segment, there is two buttons here. One for tutorials and one for academy. And if I'll click on academy, I'll be sent to the academy. And if I'll click here on tutorials, it's going to show me the videos. Okay, and I can see right away without even leaving the website all kind of content and the platform review. If I'll scroll down, I have more additional topics, trading basics, about the leverage and about the swap and about all kind of useful things. And in here we have the stocks market fundamentals. This is a lot of content that you guys can use. Really, I would really use it and enjoy it. And also, like I said, there is the link for the education section. This is for free for you guys to use. All right, unfortunately, we're out of time for today. I really hope that this webinar has given you guys something new, and this comparison with the lot size and everything helped you understand a bit better how to utilize with your strategy. Other than that, I wish you all have a fruitful week. Best of luck with trading. Join us next time and have a good day.